Hello and welcome to ETBFSI.com. My name is Amol Dethe and I'm in conversation with Mr. VP Nandakumar, the Managing Director and CEO of Manappuram Finance. So glad to have you on this show.
Welcome. Thank you, Samuel.
To begin with, sir, I would start with the draft guidelines which RBI has recently issued. First is I would like you to tell us what is the trigger for RBI, because RBI has not done a lot of things in the gold lending in the recent past. Recently, they just came with these draft guidelines. And more importantly, with these guidelines, what kind of difference, will it make for the gold lenders like you?
At the outset, may I welcome these RBI guidelines, RBI draft guidelines, because we are a serious player in the gold loan NBFC space. We are the pioneer. So what we have seen in the past also, that the regulations are implemented, there will be slight changes here. There will be some changes here and there. So for adapting that, there will be some element of a change in the process, etc. So initially there will be some difficulty, but if these are implemented across regulated entities, both banks and non-banks, we have the level playing field, and it is going to help the industry for a sustained safer growth. So around more than around 70 points, 72 points are there. The items are there in the regulation. Most of these, what I have seen is around 50 of them are already implemented. So yeah, and many of the things, few of the things will have to be put in place. The process will have to be put in place. So what important part of the item is this LTV. So while fixing the LTV, whatever is the payable for the customer, including interest, shall be 75% on the date of expiry. That is a change, major change here. So, so that will help. That is good for the industry. So whether it should, how it should be implemented to bring the LTV down by some amount, or this also have to be factored. This has to be this is debated within the industry associations, etc. And the industry association is framing some recommendations to be presented to the RBI, which we hope we will present that. So the industry as such is fully aligned to the draft guidelines, etc. So as I said earlier, this will definitely bring some level playing field. The trigger may be there are many players entering. They may not have the processes. Old companies over a period of time, audited, inspected by the regulators over a period of time. And many of these have come in the recommendations of their earlier inspections, these are implemented. So new players, because there are some nuances in the industry, particularly we are dealing with the gold, which is a of course basically metal liable for price risk. Then there is no actually technology machinery involved in appraisal. The employee should be able to appraise the gold and analyze the purity by the mere feel and touch of that, which is very which is challenging. Only with somebody who is trained for that will be able to do. So then the risks in the custody,
Right.
yeah. So
but what kind of implications do you see? Obviously, a couple of regulations, or again, it's not a final one, but most likely many of the points which they mentioned in the draft will be finalized. So if we could just believe in draft right now, it focuses a lot on the transparency, gives a lot of strengthens, in fact, customers in terms of he should be informed before auctioning, his gold should be pure, you should maintain the documents. But on a lender side, what are the operational challenges will you face to begin with? Because you might have a small branches, you might not have a technology. Perhaps you will have it because you're the largest one, but perhaps the mid-size or the small one will not have it. So what kind of implications on the operation side do you see going to happen?
One very important for the custodial to contain the custodial risk. We have the systems and processes. What we have do and large companies do. These companies have a centralized electromechanical systems, end-to-end process, etc. So, anything happens, any change happens, that is coming to the centralized zone and automatically intimated to all concerned. Then there are several other measures whereby each transaction, if it is something unusual, gives the alert to the system that is going to the various audit systems, etc. So, at the base of these figures, they do audit, etc. And many such things are implemented. We are in the business. Old companies, the major 2, 3 companies are in the business for the last several decades. The companies have learned many things through experience in the past, and as many of and most of these the large companies have implemented and using technology to create that sort of alert, etc. So these are implemented. As you asked, as you said earlier, the new companies, when they come, they may not have these processes. So the entry level challenges will be a bit higher now. But this is definitely good for the industry. The transparency will increase the stakeholder confidence. So that is good. What is coming for auction is hardly 1%, 1 or 2%. But even in that, the transparency that has been that will be brought through the new regulation when it is enforced. We welcome that. It is very much needed.
Certainly. Let me shift your focus specifically on the demand of the gold loans. In the last couple of years, actually, if you look at even 2 to 3 years, or specifically after the pandemic, the demand for the gold loans have gone up significantly. Perhaps that's also one of the reasons lot many NBFCs and banks also started getting into this business. Most of the times I'm receiving press releases from various banks that are getting into the gold loan businesses now. Uh, my point is, what is driving the gold loan market? Why, the lending of the gold, lending against gold is going high so much? Is it a new trend that you're saying? What kind of, actually, if you could decode and break out, where is the demand? How's the demand?
Earlier, this was seen as a distressed product handled by these pawnbrokers, village pawnbrokers.
Okay.
So, now that from the distressed product attitude, that mindset has changed. It has become a lifestyle product. The small farmers are using for the temporary working capital needs. During this academic reopening, etc., people borrow for a short time to meet the requirements of school, remitting of school fee, a purchase of the books and other material for the children, for to college admissions also, meeting the fee, etc., etc. So then the farmers, many type, yes, for example, the vegetable cultivators, they borrow for 2 months, 3 months, etc. But after the harvest, yes. Similarly, paddy, etc. So these are mainly, we have made a survey in the past using some outside agencies to find out the end use. What you have seen is around that 1/3 is used for these agri-related activities, including poultry, including dairy, etc., as working capital, and 1/3 is going for used by the small businesses, the kirana stores for working capital purposes, etc. And another 1/3 is going for the purpose, purposes, including consumption, while education, consumption, hospital, the medical the requirement, etc. So hardly around 5% is going for true consumption. That's all. Because people will not consume unnecessarily by borrowing against jewelry. If they wanted to do, why should they come and pledge? This is something which has got which is saleable any point of time, and any season the scrap has the value linked to the market price, maybe around 5% or 6% lower than that. So it is if somebody wanted to borrow for something yeah, which is not productive, or which is urgent for meeting some of the requirements, he will not borrow against jewelry.
Do you also see a change now? Because on the credit side, a lot of NBFCs or the new age NBFCs came with very seamless disbursal mechanism where people could simply log in and opt for a loan on the mobile applications, and they could get the fund like BNPL. So do you think that which has inflated or maybe blossom the whole consumption cycle? Do you also believe that the demand for gold loan is also going high because of the consumption cycle is very high?
There is yeah, a slowdown in the unsecured lending by all the lenders.
Hmm.
Even in the microfinance, too many lenders chasing one customer. That situation is also gone with the new guardrails set by self-regulatory organizations, etc.
Hmm.
So the flow of money through unsecured borrowing has certainly come down.
Hmm.
So this has led to a situation of the genuine customers, some of the genuine customers who are also affected, availing loan using jewelry, etc. So this is and very easy processes and very non-documented and charged with a lot of transparency, etc., etc., are increasing the interest in gold loan for the customers. So earlier was seen as a distressed product. Now nobody thinks about that. Even yeah, people from the middle class, lower middle class, they come and borrow for it. These loans are not for long term. What we have seen is out of the loans disbursed, around 20 to 30% redeemed during the first month itself. And in another couple of months, around 80% or 85% of the customers ready. The balance go for to the expiry is hardly 5%. So this leads to a situation of responsible borrowing.
As everyone is trying to expand its portfolio, every bank, I sometimes said, or every NBFC is trying to expand their portfolio in the gold loan or trying to get into the gold loan business. Uh, what kind of opportunities this particular segment creates, and what kind of difference perhaps the new age players will bring into the market, or will it be more competitive?
So the gold in the country is estimated to be around 28 to 30,000 tons. Valued over today, the value, if you take it, yeah, runs into trillion plus US dollars. So and one survey has revealed that those coming for the ornaments, most of these are purchased by the middle class and lower middle class. They find this as a store of value. In every family, yeah, this is seen as a store of value. So the gold in the family is really in large quantity. So, but what has been the situation? The families don't use this. Even without using that, they borrow it at a very high rate of interest. That was the situation. Now the situation is gradually changing. And even when this market, gold loan market was earlier dominated by unregulated entities. Even now, it is dominated by unregulated entities. The data is not available with the authorities because these are unorganized lenders. There are a lot of unaccounted money is also there in the lending. That was the situation.
Hmm.
And banks have been there for quite a long time. But why the borrower couldn't avail loan from the banks? Because they start at 10 o'clock usually. This was the history. And their counter usually closed at 1 o'clock for the gold loan customers. Then on Saturdays they don't grant loans. This was the situation. A lot of formalities. This has led to a situation of this unorganized lenders flourishing.
Right.
So we were the first, we are the first gold loan NBFC in the country. So when we entered, we were the only NBFC in the gold loan space. So what we have done is first we started branding, saying that this is not distressed product, this is a lifestyle product. If you borrow for a day, you need to pay only for a day, no pre-closing charges, etc., etc. So our custodial facilities, etc., etc., are showcased to the customers in general. This has built, this has helped us to help some transition to the organized sector. Thereafter, another players came. So the branches have expanded. So now, along with that, the banks also, because the banks are lenders to gold loan companies. They could learn how the NBFCs disburse the loan, at a reduced turnaround time, etc., process, etc., because they are the lenders. So
Right.
actually, but then their interest also in gold loan increased. This has
Hmm.
really helped the country, because why there is a transition from the unorganized lenders to organized lenders.
Hmm.
Now, more and more lenders are coming forth. Yes, every NBFC wanted to have gold loan portfolio also. Every bank
Hmm.
also wanted to have gold loan portfolio also.
Hmm.
This is in the interest of the common man. This is yeah. Now it is estimated that 60% of the total gold loan portfolio is still with unorganized sector.
Hmm.
I hope over a period of time, with these changes, with more transparency, the unorganized sector will be further pushed down in percentage.
No, certainly that was a very meaningful one.
Yeah.
Tell me something about the gold demand now. I mean, the prices are shooting up and
Mm.
it's going up and up. How do you see the whole gold structure is planning out? Because even central banks of the world are believing in gold and they're buying it left, right, and center. Earlier, they believe in US Treasury and the bonds, but now gold has become, an integral part of everyone's investment.
The gold is seen as a hedge in uncertain times. It's
Hmm.
seen as a hedge. So with more and more informations, ETFs, then etc., etc., the interest in the product has gone up. So in now we can see, because of the trade war challenges, political uncertainties, etc. So the interest in gold has gone up
Hmm.
for the investment in central bank, as well as for private individuals. So this, I think, yeah, the demand is not going to go down. So the actual turnover in even in jewelry shops has not come down. The quantity might have come down, but the turnover has not come down. So in India, I feel is really Indian households are really benefited, because we are one of the largest. Indian families are one of the largest custodians of family jewelry.
So there were different. I copy with you, but again, I wanted to learn more from you and specifically investment part. The government also came with a different scheme called SGB, sovereign gold bond. A lot of mutual funds have also come with ETFs, but perhaps SGB sovereign gold bond didn't work, and the government had to stop in there. So how do you see the whole gold investment shaping up? I mean, perhaps lending is a great business for you, but I wanted to pick up your thoughts on the investment
Yeah.
side as well.
So my gut is
Hmm.
the why of the gold deposit schemes have not really got up, because this will be melted. These are all family jewelry.
Hmm.
They spend a lot of money as making charges, with the tax, etc., for
Hmm.
buying gold. So when these are melted, actually these parts are lost.
Hmm.
Some 20%, 25% are lost when these are melted.
Hmm.
And yeah, so uh, they are buying not for as an investment alone. Oh, they buy, yes, as a family, a tradition at the marriages, yes, this is given as gift, etc. That is the Indian tradition. And many ladies wanted to hold that in their lockers. For generations, we have seen. So these are transferred from one generation to the other generation, etc. That is our culture. So when these are given as a deposit, these are melted and converted in 24 karat, and on the expiry, these are returned as this thing. So there is a lot of hesitation with that. So what was experienced? This was the report in the media several times. What is coming as a deposit was mostly the temple gold, which has already offered. There is these ornaments will have to be converted into jewelry and derive value. But gold ETFs, slowly what we have seen is it is gaining some amount of popularity now.
Right. Now let me apart from being very specific to gold, let me just understand your company prospects. We have seen you growing, leaps and bounds. But what could be the next phase for you of the growth? You're operating from a small place, which is very unlikely for a large corporates. So what could be the next space? Are you going to be happily operating from the same place or expand aggressively going ahead? And how do you see the whole economy of this particular segment is going up?
So you have seen Bain also coming as an investor, co-promoter, as far as Manappuram is concerned. They will invest around 18% once all the approvals are received from various entities. We are in the process of seeking approval from various authorities. So we plan to be here in the same place. We are from the rural village of Thrissur. We have built up the infrastructure, everything here. People also, we got good people, trained good people. Many professionals are employed here, and we have their the attrition level of senior professionals are very low. So they are all very well trained to meet the requirements. Even when the company may double, maybe in a few years, its portfolio, etc., we have that sort of strength. But the immediate agenda is definitely a digitalization and use of artificial intelligence in many of these things, which will bring down the OPEX, etc. For the growth, additional people requirement may be very limited. Even for doubling our portfolio, I don't think there is a need of much increase in the manpower requirement, because we plan to bring in new age technologies, artificial intelligence, and particularly in non-gold segments we are in, like MSME and or the vehicle, etc., etc. Even in microfinance, we are planning to bring in the AI, particularly the agilent AI part, etc., etc. So this will this will quicken the process, bring down the turnaround time, and also the transparency and accuracy at various levels of, and also the underwriting process. Everything will get automated.
That was very relevant one. Let me shoot one more question here. As soon as you start growing, today the trend is a lot of businesses shift to the metros, open up new offices, the glass buildings and everything. So has this traditional place of Allahabad proved maybe a very lucky for you, it seems, but being very traditional, what kind of difference do you think such having a headquarter in a remote place actually make? I mean, what kind of difference it makes? Like attrition point was a very important one that you shared, right?
So initially we had the challenges of bringing talent here, but Along with the growth of Manappuram, this part of the Thrissur district of Kerala has also grown. We have a mall here. We have good educational institutions here. Through CSR, we also fund the education of the poor here. We have schools here, etc., etc. Today, the growth of Manappuram is very well integrated with the growth of this community also. Not only through this development, but also they are all the small shareholders. Yeah, these original shareholders were benefited very high because our issue, our primary issue, these shareholders, one share has been gone into, now it is 40 shares. There was 3 times bonus and 5 split into 5, so 40 shares. So they are very well rewarded. They are getting quarterly dividend. So the people in this area is very well integrated with the Manappuram. They see this as their company. So the community also, when the Bain investment has appeared in media, many people asked, is Manappuram is going to shift its headquarters to some other place? We reassured them we will be here and we will be able to serve the customer all India and grow and as a new age NBFC, even sitting here.
No, certainly that's a very different flavor that you add from there for sure. One more question, and that's my last question, sir. Unless you want to add something, NBFCs as a whole are going through major changes, challenges, developments in last 2 to 3 years. The risks, the compliance has gone up significantly. The cost of fund, the cost of capital has also gone up. There are also chances that delinquencies might also shoot up. How do you see the whole NBFC sector maybe now?
Some increase in delinquencies by 1 or 2%. In microfinance, you have seen a delinquency at a higher level because of the overlending. So now, having learned that, it's a phase. Yeah. So having learned that, now everybody is very well armored now to ensure that the undesirable lending is avoided and responsible lending is encouraged. Added to that, regulatory changes, compliance systems, etc., are making the entire sector strong, even though the processes are getting more and more employees will have to be trained across branches to ensure prompt compliance, but definitely technology supports that.
Noted your points, sir. Noted your points, and that was a good one. Thank you so much for spending time with us and sharing all those important and relevant points. Thank you so much for being part of.
Thank you, Mr. Dethe.
Conversation.
Thank you.